Good afternoon, everybody. This is Chrisi from SOLSTICE ATR and Vulcan Capital Research. I hope everybody's doing great on a weekend. I look forward to seeing you in the coming week. This is the outlook for August 2nd through the 7th. I'm here taking a look at the overall market. I will go over a couple of different scenarios so you guys can understand what we're looking at. Once again, you can find my handle on Twitter as Chrisi Farah and on Discord at Zuzu9345. All these illustrations are for education use. We're not a broker dealer. Use at your own risk and try not to copy the material and the data. So here we go. Let's first start by looking at the combination of those instruments. On the weekly chart, we are nicely continuing, up, but unfortunately the last 3 weeks we've been going sideways. We closed on this weekly bar at a little bit higher. Let's go to the daily just to look at the combo as on the. We've been having side action since we had that linear regression channel. I did not re-anchor it. I just left it alone. I know we looked a little bit higher the week before we came back down. This was the Friday. This is the Thursday, Wednesday, Tuesday, Monday. Since Friday, we're just slightly a little bit higher than the Friday on the combination of those instruments. We looked up on an inverted hammer. We had two reversal hammers on the combination. Do we hold here or do we fall back to the 50, the 200, and the 116 SMA? Remember, we are side action until we are proven wrong. Trade what you see, not what you think. And let's go from here by taking a look at the, first of all, I want to go over the small cap, the canary in the coal mine. We can look at the RUT or the RTY or the IW. If you notice, since, the February drop till March 23rd, 24th, we reversed and continued higher. But we have been, consolidating, a little bit above the 1450 in the small cap. And if you noticed, I used to trade it a lot more heavier, about 8-7 years ago. Unfortunately, I moved on to the Nasdaq as well as the S&P, trading the futures here. And as you can see, the S&P, the small cap has been grinding a little bit higher, came back down, went back up and grinded back in. We are holding the 50 simple moving average in that smaller channel, which is, the connection of 1374 to the 1384 and the 50 SMA. This will be a very important area if we lose the 1450. Keep an eye on that one first of all. Let's take a look at the Dow Jones Industrial Average, which is the YM, or the DJI, or the DJX on the Dow Jones Industrial Average, which is the ETFs. As you can see here, the YM has been, consolidating very well above the 61.8. We had looked, in the earlier June, around the 8th, 9th, a little higher. We came back in. We are continuing grinding. In the last week, we had a little bit of, because, Boeing is going to be reporting. Apple is going to do a split in August. Things you got to look at the Dow as an overall only 30 companies. And I have not re-anchored the linear regression channel. As you can see, the machine grabbed this point to this point, connected it to here. I would connect those 2 points right now. Keep an eye on them. We are, above the 50 SMA. If we end up losing, the 61.8, it's going to be a tell. And if we could break up above the channel, we would continue back up to the June 8th, June 9th, prior high to continue higher. So that's the Dow. Let's take a look at the Nasdaq, NDX, QQQQ, or the /NQ on the futures. As you can see, we had this was the prior high in February, then we came back in June. We looked above it, came back down, and since July 6th, this is July 29th, and July 6th, we had continued higher. We are in a linear regression channel, in a down channel. This would look to a lot of people as a flag from this push higher, but for me, it's a linear regression channel. As long as I do not lose the 10,650, then I would look for the 10,000, then the prior high from before, and eventually to the, the F3, which is the 38.2 fib. This is my resistance. This is my support. That's my 61.8. That's my 50, and that's my 38. 78.2 fib. I do not have the 23 here or the 78.2 here. I just, reference the 38 and F6 and the 50. So that way you guys know what's on the chart. Let's go now. Take a look at the ES. You can look at the SPY, SPX, which is the major contract, or let's take a look at the SPX by itself. As you can see in the SPX, since that gap we had tried, to fill this area here, that gap that we had from the February, we retested, a piece of it, haven't been able to continue. We had that up move, we came back in on Friday, and we pushed a little bit higher than the week before close. We are on a continuation consolidation. As long as we do not lose the 1325, 1328 and the 1318, 15 area, then we can touch the, we lose this channel and eventually touch the 50 SMA and the 200. Our 38.2 is around, the 2855. This was the prior H pattern when we fell down. In February, we created an H when we went back and looked down. This is a very critical area. Most people are not looking at the 3136 or the 3069 would be still bullish in the overall market. We're going to trade what we see, not what we think. Let's go over, I will go over the volume in the ES and that couple of different instruments. But what I want to do is right now go over a couple of different equities just to looking at them. APL, and I will do gold, silver, and Bitcoin, as well as oil. So on the announcement that they're gonna do in August, a split, Apple has that major gap in here, and it's gonna become, cheaper for the average investor. If they're gonna split this 4-to-1, let's say it's $115, better than buying, 100 shares at $425 for the smaller consumer. That's Apple. Let's take a look at Amazon. Amazon, you can see on Friday it gapped up, and we have this little gap. Amazon, you can play the 285 to 2800. If it holds up, then you can play the 3350, 3375, or you play the 2880 to 2875 on either side if you like to look at Amazon in the long term. Let's take a look at Facebook. Created a new high after the earning report. You can see that major gap. Keep an eye on it. Let's take a look at Netflix and FLX. I forgot Google 1 second. This is the report. It came back in. It's holding that Netflix, that linear regression channel. If it doesn't lose and doesn't lose the 50 SMA, I would look for the 435. For 415, 420 for a buy zone. If it holds here and it breaks the prior, these candles here, that 500 range, then look for the 520, 525 to fill that wick that we had after the earning report. Let's take a look at Google. Google. See, after we had looked up, I didn't anchor this channel up. We can do that right here so you guys can see what we can do. You can grab it, remove drawing. We'll anchor the other one up here. You grab a channel. We grab one. We anchor it right here. And we grab that prior high. And you can see we are almost in a linear regression as an open cone. We are holding the 50 SMA and the channel. If we do hold this area and we continue, we have to clear the 1520, 1525, then the 1535 in order to continue higher. If it falls back, look for the 61.8. For this consolidation before the fall. If not, the major one would be the channel down here in Google. Let's take a look at Tesla. And here's Tesla. I mean, we looked up, came back in. We are, looks like in an H pattern. I do have this gap here. I'll show you some of the gaps in Tesla. This is a major area that I would look, and we can mark it here with an oval. I would like to get to that, the ovals down at the bottom to fill those gaps and eventually, get, come on, there we go. And we can draw a channel, linear regression channel. I would like, to not the 38.2, this is the first gap and the second gap, these two candles. I would like to see it coming to the 50 SMA in this channel for Tesla to grab back to the upside. Let's take a look at gold GC. GC on a daily chart, after it got to the 1999, if you look on the monthly chart going back, historically way back till 2000, 2003, what we can do, we can go to a maximum time frame on GC and go to a monthly chart. And here's the why I was looking at it that way. Since, the 2001, 3, we had that rounded bottom eventually, then we pushed up. Then we had the 2000, 2008, 2009 continued higher till 2013, then we eventually fell. We have looked above this area, which was the high 1923.7. This is a very critical area, and I do have the 38.2 extension and a 38% fib. If the 38.2 fib looks like it's exhaustion and comes back to the 23, I would like to see it back in that consolidation around the 1855, 1850, 1835 for a buyback and continue higher in GC. Let's take a look at oil CL. And to the daily, this is so far out, we don't need to look at it that way. I mean, this is the 2008. I remember when the oil prices was up, in the $5.50 range in California, when 2008, 2009 real estate bubble blew up. Then we had looked back at the $80, $100 range, fell back down. We looked at the $70 range and we fell further down. We can go look at it weekly. As you can see, the weekly, we haven't been able to take out that prior 66 we were expecting, after the Saudi, crisis in Iran when they, interrupted the oil. Then eventually between Russia and the Saudis, pumping more oil caused a reaction and a slowdown in the market. At the same time, they tried to keep the prices up. We haven't been able to fill that $45 range. This is a very critical 42.36 to clear in order to continue higher, and that's your 61.8 from this high to this low. On the weekly chart, we've been consolidating on a daily chart on oil. I'm looking for either direction. If things are, transport, manufacturing going back online, people need gas, to maneuver, keep things going and stuff. I mean, we've been going for the last 3 weeks sideways action. I do not like to see, the 36, area retested or the 50 simple moving average. I would like, to see a breakout and coming back to the prior channel. This linear regression channel over time has fallen apart due to the price action going sideways. So right now, oil's in consolidation until we see something different. Let's take a look at BTC/BTC, because a lot of people, always are looking at Bitcoin. What I want to do, if you notice here, this was the prior consolidation. We looked a couple of times in this area. We looked up a little bit. We fell down. Eventually, we broke up above the 11,250. I'm still thinking this can be retested in this area to come back lower, because everybody's looking at this prior high, which is around the 12,500. The consolidation inside these candles before we fell down, they were in the 11.8, 11.9 area. And if we cannot clear this little tiny gap in here, which is the low of this candle, 11,795, I think this may be resetting to go a little bit lower, then continue higher. Everybody's so bullish, they buy the break. I mean, if you buy the breakouts, is great, but if you're buying at the highs, usually you don't want to chase those instruments because they are a little bit overextended out of the breakout. And what I can do is just show you this prior consolidation in the 9,200. We called it in this area here when it started, trying to consolidate. This was the down channel. It was wedging and eventually it broke up and it continued. My target was around 11.2. Since then, it has cleared that area and continued higher. What I'm going to do is zoom in. This is the overnight action. As you can see, between this candle here and this one here, there's a minor little gap. I think this 11,540, if we can retest it and does not hold, look for the backside of 11.2 and eventually, the 11,000, and then we can consider the 38.2 fib for continuing higher. I'm not bearish or bullish, but this can continue higher on BTC. Let's take a look at the ES and break it down in details here. I am using the 4-hour chart here, and the ES I do Fibonacci's from the prior week. consolidate. You can see I have a symmetrical triangle from before. We're still holding that up channel in this channel here in the linear regression channel. Those two channels that I have on the 4 hour, those two yellow ones. And on Friday I wasn't here for the close. Unfortunately, I had a meeting. Myself and my partners, we were out, trying to get ourselves set up, to run a fund, you know. So unfortunately, we broke out. We kept above the if you look at the 2-day range, we cleared the 26 area, the 28, the 38, and eventually the 43, and we closed a little bit higher on the distribution of this area. So if we consolidate these 5 days, this is Friday, Thursday, Wednesday, Tuesday, Monday, we're still inside the prior 3-week range, because that last week we looked up and on Friday we fell down to close lower. Then Monday we went up, Tuesday we went down, Wednesday we went up, Thursday we came down and pushed higher. Then on Friday we looked down and they tried to close the books clean, and we pushed above the 28, the 37, and the 47 to continue higher. My line in the sand is about 54 right now to 58. If I see 54 coming back in and it does not hold, I look for the backside of this channel, then continuing lower. If this is going to continue higher, we would break this minor channel to continue higher. What I'm going to do is remove the fibs so you guys can see them. Remove the Fibonacci's. Remove drawing. And we'll zoom in here so you guys can see it. So as you can see, this is the linear regression channels. We are in an uptrend. As long as we are above the 42, 45, and 32 area, that's your 50%, and your 61 is 26. This is where the majority of the POC is. And what I'll do, I'll go to style, show you the monkey bars. Style, standard, monkey bars. It'll show you the consolidation. This is the 10-day 39 minutes. You can use a 30 minutes, similar situation. As you can see that the PLC never immigrated higher, so you can take these 5 days consolidation or 10 days consolidation of the volume profile and take the high and the low, and this would be your fib. So you can grab this, because you can see where the most of the POCs are. You can grab this Fibonacci. We'll anchor it down to this low, which was 32 31, 91, 50, 91, 50, close enough. And you grab the top, which was on that candle, 32, 84, 50. As you can see, the 50% fib is around these consolidation of these POCs, because Wednesday we had a higher POC, Thursday we had a lower POC, and on Friday the POC we have been immigrating lower in the POCs, but we revisited those POCs on this push higher. That's a virgin control point. Keep an eye on it on Friday, in the gaps to continue on. Most of the time was spent in the afternoon is up here. We're back inside the prior week range, so trade what you see, not what you think. I want to go over a couple of different instruments before we go, and what I'd like to do is break this down for you. I do have showing you the Volatility Vix, and what I'd like to show you is in the VIX. Since the 2008, 2009, that prior spike up, we had looked higher, it came back down to the 26. So the volatility in itself compared to the S&P 500 and ROC is actually the resistance and support on RSI. By taking a look at the prior ranges from before, since 2009, we had fallen back below the $26 range. So keep an eye on the VIX to give us clues what the market is going to offer us. Number two, I had used here in this one the 200 weekly moving average from 1929 and through 1932, 1 week below the 200 SMA. In 2003, 2000 we had a 5 week below the 200 simple move. In 2007 to 2009, we only had 2 weeks the 200 SMA and below. And as you can see, in 2019 through 2020, we only had 3 weeks below, and the majority of the 200 SMA has been continuing, week after week. For this last 17 consecutive weeks, we've been above the 200 SMA on the weekly chart. 200 SMA 17 times in 2007, 2013, 8, and 5. Let's go to the next one. This is the Nasdaq 100, which is the composite. You can look at the QQQ/NQ. You can look at the NDX. As you can see, as of July 6th, which we broke the prior high in June, we looked up, we fell down, we looked up, and eventually we broke out. We've been consolidating in this linear regression channel. I mean, if things do change in the market, we look for this channel to break down, and eventually that 9600 would not be supporting us anymore. We can fall back to fill this prior gap, and eventually partially this area, then we become bearish if the trends does change. As long as we are inside this regression and we are holding the prior highs, we are in continuation, because the semiconductors, the transportation in the Nasdaq, or the DJT transportation is doing much better. If I take a look at the S&P 500 100-day moving average since 1984 through 2020, we only had a couple of times the 100-day moving average fall down. In 2000 to 2001, we fell below it. In 2007, 2008, we fell down below it. Then we have continued in 2016, because this is the Eurozone, very minor. We had the 2018, which is very minor because due to the tariff, and this is the COVID-19, the coronavirus. So this pandemic, is it going to recover and continue higher? Possibility. Here's the scenario when we take a look at the 100-day moving average from 1994 till 2020. We've been majority of the moves way higher from 1995 till 2000, then from 2013 till 2008, then from 2010 continuation. We had a little glitch in 2012, a little glitch in 2016 due to the Eurozone. This was the basically the tariff, and this is the coronavirus right here. We are above the 100-day moving average in the overall market. One scenario to consider: if the drawdown in the market is about 4 to 5%, we can consider that the S&P 500 sitting at 3200. We can zoom in a little bit more so you guys can see it. This is as of the 23rd of July 2020. I did not re-update this chart. I used an older one. Can we recorrect and come back down all the way to 3069 and still be bullish? Yes. So trade what you see, because the overall 6 months drawdown, it's about 3%. Up is about 27, an average of 12. Over 1 year, 10 and 43, 27. And maximum gain in the market is 115 in 5 years, or 64. If we average it down, it's 90%. So trade what you see, not what you think. Be safe out there. I look forward to seeing you in our Discord, in our chat room. Ask how we can help you. More than happy to help. Take care, and over.